Stocks drift lower after a strong open but stay ranged following the mixed overnight cues from the US. Metals and realty lead the gains while IT drags today.
Dabur India inks a deal to buy 51% in Badshah Masala, marking its foray into the red hot spices segment. This even as it reports an inline set of numbers.
Time is running out for Tata Steel UK, says the Managing Director TV Narendran in an exclusive chat with CNBC-TV18. This even as hopes for support from the UK government to shoulder green costs.
Axis Bank and SBI tell CNBC-TV18 that growth can't sustain without a pickup in deposits. On another note, Axis Bank says it is committed to Max Life and is not looking at a fundraise now, at least not till the Citibiz acquisition is done.
The government may be looking at rolling out PLI schemes for 8 more sectors, including for raw materials, for vaccines as well as drugs. That's a CNBC-TV18 exclusive. Hello and welcome. You're watching Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. So Pavitra, it was a good break for Diwali, but we are back to work.
We're back.
And as I've been saying, that market probably is giving up that festive cheer that we had seen earlier. Opened on a good note today, but just about holding on in the green Nifty 50, but there has been a consistent slide on the key indices. So 17,689 levels, so below 17,700. Remember, it opened above that. When it comes to Bank Nifty, it is definitely showing an outperformance. So there is some strength in the market today, almost 0.5% up in trade. Mid-cap universe, the smaller companies also doing far better. Remember, they had got a drudging last week, but then it has really picked up almost 0.5% up. So advanced decline ratio, because of the broader universe really participating, is looking strong now, even though Nifty as well as Sensex are on a tepid note, but still in the green comfortably. JSW Steel, Hindalco, Tata Steel are some of the top gainers. So metal is shining in trade today, Pavitra.
Oh, absolutely. It is the metal index which really has it. In addition to that, some of the real estate stocks are doing well. The index itself is up around 2%. So something like a DLF, Prestige, Godrej, I'm just naming a few. But that entire real estate pack is doing quite well. A lot of the banking space, of course, we've been talking about, but some of the smaller banks, take a look at those ones, the likes of, something like a South Indian Bank, Karur Vysya Bank, RBL is up over 10%. So that is the kind of momentum we are seeing in this space. On the downside, of course, it is a few of the tech names which have found their way there. We did get a lot of weak earnings from the US, and my sense is this entire space could be in focus because a few more are due in the coming days as well. So watch out for the tech space. Remember, it is FNO expiry date today, so we could see some volatility as we head into the end of the session. But that's what's happening with the market. Let's talk about these individual names now. One that we have on our radar is Gland Pharma. It is in focus after reporting a disappointing set of second quarter earnings. The stock has also taken quite a beating. It's down around 15% now. So Ekta is here to tell us more about the earnings. Ekta.
Well, yes, definitely a disappointing quarter which came in for Gland, especially on the margins, you'd have to say. So, for example, the revenue was down 3%. The street was anticipating a decline of 9%, so that was better than estimates. The margins were really the pain point, came in at 28.5% or thereabout, and that was a sub 30% figure. It was down over 600 basis points on a year-on-year basis, and the street was anticipating at least around 31 to 32% in terms of margins. Profitability also missed estimates of around 250 odd crores. Now, the core growth market for them, which is basically the regulated market, that was up around 3 odd percent on a year-on-year basis. It's over 70% of its sales, whereas its India business continued to decline, so it was weak for the second quarter in a row. Last quarter, it was down 70%. This quarter, it was down 40%. But it seems as though the street is a little more skeptical in terms of the medium growth outlook for Gland, and that's where the concerns lie. Now, what could probably support the stock is the net cash, which is still strong, and the stock is already down over 50% from its 52-week high. It's trading at around 20 times 1 year forward. Brokerages were quite, they were quite negative with regards to the performance. So the likes of Bernstein, Goldman, Incred, Citi, all of them have cut their target prices, though they've maintained their calls on the stock. And Jefferies has downgraded it to hold with a target price of 2241. The likes of Incred, Goldman Sachs, Jefferies, all of them have cut their earnings and EPS estimates on Gland.
All right, not a good showing on Gland Pharma. Thanks so much, Ekta, for giving us that exhaustive analysis on the company's performance. Let's now shift focus to one counter which is on my radar, which is Axis Bank, and take a look at that particular stock. Yes, it is doing well in trade above 900 rupees per share level. And if you really look at the 52-week chart for this particular stock, it has not done so well in the last 1 year of trading. So keep an eye out on that. In fact, we spoke to the management of the company today. MD and CEO Amitabh Chaudhary tells CNBC-TV18 that the lender is committed to Max Life and not looking at a fundraise until the Citi acquisition is concluded. Take a listen.
There is absolutely no intention to raise any capital till the Citi acquisition is done. We will look at the right timing and we will look at the right price, and we will look at the fact that our existing shareholders don't get diluted unnecessarily. We do believe that we should be able to close the acquisition either in the first quarter of the next calendar year or in the second quarter. Our intention and desire is that Max Life gets listed at some stage. Obviously, it has an implication on the Max Financial Services shareholders. So I'm quite confident that again, Max Life and Max Financial Services is working with the regulator. At a macro level, for the loan growth to sustain at this level, given where the deposit growth is not possible. You cannot have a situation where deposits are growing at in a single-digit rate and the loan growth is racing ahead at 18-20%. Actually, loan growth needs to follow the deposit growth.
All right, loan growth needs to follow deposit growth. In fact, staying with the banks, we also spoke with SBI Chairman Dinesh Kumar Khara this morning on what the key trends in the banking space are looking like. So with loan growth picking up, credit growth picking up, listen in to what he had to tell us.
It's a very, very dynamic situation. What we are observing is that there's a decent credit growth, which you also just mentioned. And of course, to fund that kind of a credit growth, deposits are, of course, very, very critical component. The remaining part of the current year, we will get to see some money being spent by the government, which will also bring in more liquidity in the system. Yes, of course, currently the banks are increasing interest rates depending upon their ALM situations. But yes, I think it's a very positive sign. If at all the credit is growing, that's a very clear reflection that the economy is on the upswing.
All right, so bank really capitalizing on the interest rate hardening cycle at the moment. All right, let's shift focus to the metal space, which is shining in trade today. And Tata Steel is on our radar today. The CEO of the company, TV Narendran, says the time is running out for the company's UK business. In fact, speaking exclusively to CNBC-TV18, TV Narendran also says that the steel major hopes that the UK government will take a decision on funding soon. Listen in.
Most steel companies to their governments across Europe is at least 50% of the capex that needs to be spent needs to be supported by the government. On top of that, there needs to be support on OPEX to the extent of the differential in energy costs when you move from the current energy sources to new energy sources. I think these are the fundamental principles, not just for Tata Steel, but pretty much all steel companies in Europe have been talking to their governments about. And so that's as much as I can say now without getting into the specific. Each of our businesses need to stand on its own. We have supported the business for a long time. We have invested a lot of money over the years in trying to keep the business going. But I think now it's time for other stakeholders also to chip in. The time available is depleting by the day because we had a year when the steel prices were good, the spreads were good, the business could stand on its own. That gave us some breathing space. But that breathing space is rapidly vanishing because of the high energy costs in Europe and the macroeconomic conditions in Europe and UK, right? So we don't have much time, So we need to get to this decision sooner than later, and I think that's been a submission to the earlier governments, and there'll be a submission to the new government. What are the options that we will pursue or discuss when we reach there?
All right, that is the word coming in from the Tata Steel management on the UK business. By the way, those are BEL's numbers flashing on your screen. Absolutely flat net profit at 625 crores. The stock is giving up a little bit, so it has come off the highs, but we're waiting for more numbers. Revenue is up around 8% this quarter. versus what we saw last year. So we're waiting by for more numbers. For now, the stock has given up just a tad, but is holding up with a gain of around 1%. Let's get into a short break now. But when we come back, we're going to get you a complete lowdown on how auto sales panned out during the festive season. So stay tuned for that full report card. Welcome back. You're still tuned into Business Lunch, and let's talk about the auto space now. The festive season has been quite a mixed bag for this sector. So while passenger cars have reported solid growth, over 40% growth versus last year, it is the entry-level vehicles which continue to struggle. So Parikshit is here with a complete roundup of what the festive season has looked like for the auto sector. Parikshit.
Well, on the whole, the auto sector is expecting 40% growth, a minimum of 40% growth in retails during the festive period, which began on the 26th of September with Navratri and went all the way to Diwali and Bhai Dooj. The best performance coming from the passenger car segment. Maruti Suzuki, for one, is expecting at least 45% growth during this festive period. They retailed around 190,000 cars, but the numbers for Maruti is still lower compared to 2019, a pre-COVID year. On the whole, the industry retailed around 400,000 cars during the festive period. Mahindra also doing quite well. Their spokesperson told CNBC-TV18 that they're expecting 2 to 2.5 times growth over last year. And they've seen strong growth, not just in SUVs, but across categories. So we've seen strong growth in the SUV segment, driven by the XUV700, the Seltos, the Safari, the Harrier, the Kia Seltos as well. So all SUVs seeing strong demand during this period. Mercedes-Benz in the luxury segment saw 15% growth, 800 cars retailed on Diwali, 600 on Dhanteras, 1,000 order booking. So they feel the demand momentum will continue. But the problem continues with the entry-level two-wheeler segment. That remains under stress. So even though overall the two-wheeler segment may see an uptick or a double-digit growth, the entry-level segment continues to lag behind.
Right, Parikshit, thanks so much for all those details. But stay on, because we'll also focus on another story that you are tracking today, which is that the union government has been reviewing the PLI schemes, and very soon incentives could be really announced for at least 8 more sectors. CNBC-TV18 learns that government is considering allocating at least 30 to 40,000 crore rupees worth of additional incentives through the PLI schemes. And one of the priority sectors is the pharmaceutical sector. And Parikshit is right here to tell us more what he's learning from his sources in the government on the plan of action here and how to really reduce the reliance on imported raw materials when it comes to pharma sector. Parikshit.
That's right. The next PLI scheme for the pharma sector, there are already schemes for medical devices and pharma drugs, but now the PLI scheme for the pharma sector will focus specifically on vaccine raw materials. There is an input from the industry that the government has received, and there is a clear mandate now from the government to reduce reliance on imports of raw materials for vaccines from China and the United States. And this PLI scheme could be to the tune of 5,000 to 6,000 crores. It would be aimed at increasing investment in vaccine raw material manufacturing in India and also import substitution. It would likely cover all vaccines manufactured in India. Currently, the feedback that the government has received that there are at least 350 vaccine raw materials which are used for manufacturing. India is importing 70% of its raw material requirement right now, majority from the US, but also a large amount from China. All companies in India have been asked for inputs. All inputs have gone to the government. Very soon there will be stakeholder consultations and a final draft will be issued in public domain. There are at least 8 sectors which are being considered for the next round of PLI schemes, which includes toys, leather goods, shipping containers, coal gasification, specialty steel, specialty chemicals, but vaccines, of course, a priority for the government.
All right, Pariksha, thanks a lot for bringing us all of the details. But moving on to another important story that we're tracking, in a major relief for Dhanlaxmi Bank, a division bench of the Kerala High Court has ruled in favor of the bank, which is now setting aside a writ petition filed by 4 shareholders seeking board positions. Now, this ruling will pave way for expansion of the board, and it will also help it proceed with its proposed fundraising plan. So, Ritu is here to explain this to us, to take us through the order, as well as how things could proceed from here on. Ritu.
Well, that's right. It is a relief for Dhanlaxmi Bank because the Kerala High Court has now upheld the petition which was filed by Dhanlaxmi Bank, rejecting the writ petition by 4 individuals who had sought board positions on Dhanlaxmi Bank. Their candidature, remember, was rejected by the board last year, and they had challenged this in the High Court, and now there is some relief coming in for Dhanlaxmi Bank. Now, this is important because one, the current board of Dhanlaxmi Bank is only 5 members, and that includes the MD CEO as well as 2 RBI nominated directors, and this will pave the way for the expansion of the board, the nomination of a woman director as mandated by SEBI. And once the full board is in place, the bank will be able to go ahead with the proposed rights issue, which it had proposed to raise about 130 crore rupees, and that had been stalled because of the AGM being held back because of these ongoing litigations in court. Now remember, this also comes at a time when the shareholders and their ongoing tussle with the management continues. An EGM has been called for on the 12th of November by a section of the shareholders, which represent about 13% stake in the bank, that have 2 items on the agenda. One is, to appoint a board director to, handle these writ petitions, which of course will not arise now with the Kerala High Court ruling. And the second matter is curtailing the powers of the MD and CEO with respect to expenditure other than, necessary expenses. This, remember, is ongoing. The last CEO was also ousted by the shareholders, and this tussle has led to several top-level exits at the bank. So 12th of November, that is the next day to watch out for. As of now, a relief because the board can be expanded and the bank can go ahead with its rights issue.
All right, Ritu, thanks so much for all those details. And with that, we'll slip into a short breather on business lunch. But the European Central Bank will be announcing its rate decision today. We'll get you all the expectations from that after the very short break. Stay tuned. Welcome back. You're watching Business Lunch. A quick look at the market. And yes, market is looking stable at this point. Nifty 50 as well as Sensex have gained a tad bit, but still just below that 17,700 mark for Nifty 50. Bank Nifty also stable with close to 0.5% gains. But keep an eye out on Bajaj Twins, Finance Twins, and they are big draggers in trade today. So keep an eye out on that one. And also Reliance Industries, big boy, a very heavy weight on Nifty 50, and that is at the low point of the day at the moment. So mid-caps are saving grace at the moment when it comes to the overall markets. Moving on to some international developments then, and the UK's Minister for Trade Policy, Greg Hans, has said that most of the free trade agreement deals with India has been agreed upon, with the next round of talks expected to begin shortly. In fact, my colleague Abhimanyu Sharma has been tracking it very, very closely, is joining us to get us up to speed with the latest on the UK-India FTA. Abhimanyu, tell us.
Well, the Minister of State for Trade Policy in the United Kingdom addressed the House of Commons and clarified that the UK is going to proceed with signing the FTA with India. However, it is only going to sign the same if at all the terms which are agreed upon are fair, equitable, reasonable, reciprocal and beneficial to the UK economy. He said that 16 chapters out of the 26 potential areas of the free trade agreement have already been agreed upon, and talks and the next round of talks is going to take place soon. It remains to be seen how early the talks are going to take place, since earlier the FTA was supposed to be inked by Diwali. However, political developments in the United Kingdom led to the delay in talks. However, both the countries, India as well as the United Kingdom, remain steadfast in their approach towards proceeding with the FTA talks. However, various issues remain over which discussions are likely to happen. Number one is the issue of tariffs, and that's not just on Scotch whisky, but also in the area of professional, legal and financial services, in which the Minister for Trade, the MOS for Trade Policy of the United Kingdom had pointed out that the UK is looking at getting some relaxation as far as the export restrictions from UK are concerned towards India. Also, he said that India stands to gain from the areas of investment and life sciences, and the terms of business visas will also remain an active area of negotiation between both the countries. He also said that on the issues of IPR as well as tariffs, it will be easier for companies to work through innovation if at all the FTA goes through. It remains to be seen what further concerns will be raised and addressed by both the countries, even as the approach remains steadfast and both the countries remain committed to the next round of talks.
All right, Abhimanyu, thanks a lot for bringing us all of the details. But with that, let's also bring you some important central bank action, which is expected later today. So the European Central Bank is expected to announce its second straight 75 basis points hike and the third overall hike. And this will take the key interest rates to 1.5%. Now, investors will also be watching out for any other measures that they do announce in order to tackle inflation, which is really high and, is the key worry in the region right now. So Jumana is standing by to line up all of the expectations for us.
The event itself, the monetary policy decision, is pretty much cemented. They've all made the case. Various ECB senior members of the committee have made the case for a 75 basis points hike, and they've basically all consolidated around that. There haven't been a lot of dissenting voices going into today. So 75 basis points is the baseline expectations, but all eyes will be on what signaling Madame Lagarde gives for further interest rate hikes in the future. Now, it is worth bearing in mind that even though they're not going to be releasing updated growth and inflation projections today, inflation is still running at 10 percentage point. Core inflation is still running at 4.8 percentage points. So there certainly is an impetus for them to continue with the hiking cycle. The question is, by what increments? And that is one thing that the markets will be looking for and to get out of this meeting, especially given the ECB in the past have guided to a higher range of about 2 percentage points for the neutral rate. How much above that are they willing to go? Perhaps we'll get some more answers today. The other element that investors are going to be focused on is what they decide to do with the size of the balance sheet. And this has become increasingly important given that there are about 4.7 trillion excess reserves right now sitting at the ECB, earning the interest rates at the deposit facility rates. And for many of the banks that have TLTRO funding, this has created sort of a free money arbitrage opportunity because they're borrowing at lower rates and then placing that cash at a higher deposit rates, creating free money essentially. So there is talk that the ECB may look to crack down on this practice, perhaps by tweaking some of the terms of the TLTRO to make it more in line with the deposit rates. That would obviously send a strong signal to the banks. But then the other element to watch out for is whether they start signaling that they want to start actively doing quantitative tightening and perhaps no longer reinvesting some of the bonds that they had purchased under the PEP scheme. Not something that would happen right now, but it could be announced in preparation for that QT to commence at some point in the middle of 2023. So a couple of factors here, but the hike itself is very much being flagged at this point, 75 basis points.
All right, all eyes would be on the ECB rates and also market is seeing some bit of resurgence. Adani Ports, Kotak Mahindra Bank, keep an eye out on that. With that, it's a wrap on Business Lunch. Mid-Cap Radar comes up next. Stay tuned.